In today's video, I'm going to be having a look at what Ray Dalio has said about the US economy and stimulus. I'm also going to be looking at the New Zealand economy and its better expectations. From there, we're going to have a quick discussion about Nikola and, of course, a little bit of a market wrap for you all ahead of the US Fed FOMC announcements tonight. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host for today's journey. Now, moving forward, it's been a muted start to Wednesday. We've seen Asian equities not sort of moving around that much, and of course a variety of other markets as well. Futures offered modest gains in Australia, Hong Kong and Japan, while S&P futures were flat, with a little bit of an offset being provided between the tech giants and of course the slide that we've been seeing in finance equity markets as well. Now, looking forward from that, we've also seen treasuries and the US dollar sideways, and oil is up, but only just. Really, at the moment, everyone is sort of waiting to hear what the Fed is going to do, particularly with their statements about running inflation hot. Tonight, we're going to be seeing their economic forecasts and projections. So we're looking to see if we are in fact going to get either some of these projections indicating that we're going to have growth in the economy, or if they're reducing their expectations more in line with a longer recovery. Now, moving on, Ray Dalio has been worried about the US dollar for quite some time. He's really looking at the concerns about it actually being debased. Now, whilst all that might be the case, really we have to keep in mind that Bridgewater Associates has lost 18.6% this year, and that is just so far. That doesn't mean it's going to be the case for the entire year. Unfortunately, Ray hasn't had that much of a luck with his holding onto his hedge fund dollars, just as much as he hasn't had much luck holding onto his hairline. Now, looking at what's going on for the next bit and what Ray was actually talking about is on what's happening with the Fed stimulus efforts. Now, he's worried they're going to go too far with the amount of money that they're pumping in, and that investors are looking that instead of putting it into the US dollar, they're moving it towards gold and stocks and keeping it away from bonds, treasuries, notes, and of course, the US dollar. All of which helps sort of contribute his argument a little bit here. So, something to keep in your mind. It is not the first time we've heard about the idea of the US dollar being debased, but as you probably read some of my stuff before, I've said, what do you replace it with? And that is still the same question I'm going to ask this time round. Now, moving on, the New Zealand economy has beat its forecast. This year, we were expecting to see their economy drop by 4.8%, but so far in June, they've hit 3.1. So that's pretty good. That's a lot better than what they were forecasting and expecting. Of course, their jobless rate as well has been improved. They were expecting something around the 9.8%. They've revised that to be down to 7.8 by at least year 2022. Now, they're also expecting to see their second quarter results coming out quite shortly, and that is going to be another signal that they're going to be contracting. That's what they're expecting. They're forecasting for the second quarter this year to have a contraction. Now, naturally, 2 quarters in a row means that they are technically in a recession. So we are going to have to keep an eye on that. I would anticipate seeing the New Zealand dollar devalue at that news, but we'll have to keep a closer eye because we don't know. They have had some better than expected results. Regardless of all that though, their international trade, their dairy trade has all been subdued, which is obviously going to affect their overall GDP abilities. Now, the last one is that their nominal GDP has also declined so far, so we'd have to assume that we are going to see that decline or the contraction on the second quarter. Now, moving forward again, we've been hearing about Nikola a lot in the news recently. Nikola is the rival to Tesla, for those of you who might not have heard some of the other videos, and they've had a slew of bad luck. First, they had some good news that GM was going to be getting involved and they were going to be helping develop a new vehicle that was electric based. Now, since then, we've had a short seller, Hindenburg Management, decide to look at some of the research, and they've said that they think that there is a case for fraud. We've then had the SEC start looking into those allegations, and now the US Justice Department is doing the same. So they really can't catch a break right now, but we don't want to have guys with fraud in the stock market either, do we? So let's keep an eye on this situation fairly closely. I imagine that if we do see Nikola get charged for having fraudulent activities, then the chances are we would likely see a rise in Tesla. But we'll have to wait and see a little bit further down the track. Looking at some other things that have been going on across the US economy, the zombie term has been revoked or been reused again in today's newspapers. Now, what we're seeing is that zombie companies are these companies that are between life and death. They're not generating revenue to cover their debts, and they really are surviving just on the stimulus that's being provided to them. Now, if we actually look at what happened in 2008, you can probably just see the edge of it in the chart behind me now. 2008 is that first very big spike, and it shows the percentage of businesses that are in the zombie status and rising across the Russell 3000 and 2000. Now, what we're seeing here is that those numbers are climbing up. We're nearly at 16% of businesses in the Russell 3000 or equivalents giving us a zombie status. So that means that we have a large proportion of companies starting to run into troubles. And of course, usually after that happens and they all go bust, you do see valuations start to change up and shop around again. So keep an eye on what's happening there. Now, for the news ahead, tonight is a big one. I've already spoken about the idea of the FOMC projections and their rate statement that's coming out tonight. We are looking, I'm not expecting to see more rate changes or action from that front. It really is more about the projections tonight. So make that your focus. See where the Fed is going to be looking to go over the next 12 months or perhaps even longer, because that's really where we're ultimately looking to see since they've done their strategy or announced their strategy change of having averaged inflation and allowing it to run hot and obviously targeting fuller employment. So that's really going to be the big one for tonight. That's why we are seeing subdued markets, and that's why we're going to have to be awake at the early hours of this morning to see what's going on. Now, otherwise, in terms of news, we have a lot from the UK with their CPI figures, PPI figures, HPI figures, and RPI figures. And we can't forget about 10-year bonds auctions results either. So all of that coming out for the UK, starting from about 4 p.m. Australian Eastern Standard Time onwards. From there, we also have Canadian CPI, and then we have US retail sales about an hour or two before we see the FOMC projections. So a busy night for us ahead. I am hoping that we do see the markets liven up a little bit tonight at the US session, but until we do get that FOMC report, we are likely to see things sitting a little bit consolidated or sideways for the time being. Anyways, that's all I have for you today. I hope that you have enjoyed it. Now, if you have any questions on today's session or perhaps some of the other ones, feel free to shoot me an email at talk2al@acy.com. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.